Thank you for joining us at xm.com for today's market comment by Harlan Pospisuros. I'm Maria Pachardez. The U.S. dollar continued gaining against most of its counterparts on Wednesday, losing ground only versus the euro and the pound. That said, today it is pulling back, perhaps on profit-taking following its latest advance. What pushed the greenback higher yesterday may have been the better-than-expected U.S. retail sales for December, with both the headline and core rates coming in at double their November prints. Accelerating spending may have added to investors' concerns that inflation could remain sticky for longer than they had previously expected, and that's why the probability for a March rate cut by the Fed was lowered even further to around 60%. The total number of basis points worth of reductions for the whole year was reduced to 145 from 150. Today, Atlanta Fed President Raphael Bostic will step onto the rostrum, and traders may be eager to see whether he holds the same high-for-longer view as his colleagues. The yen was once again the main loser due to further widening in yield differentials between the U.S. and Japan. With the Bank of Japan appearing dovish at its December gathering and inflation in Japan cooling, market participants have abandoned bets of an imminent tightening step. With that in mind, they may pay attention to the national CPI data due out during the Asian session Friday. The pound was one of the two currencies that recorded gains against the greenback yesterday, and this was due to the hotter-than-expected CPI inflation numbers, which corroborated the view that the Bank of England will likely follow a slower easing path than the Fed. The other winner was the euro, perhaps as ECB President Lagarde's comments that there may be majority support for a cut in the summer was interpreted as no rush to act in April, as she also noted that if investors are mispricing the ECB's future moves, that could be counterproductive to the fight against inflation. Today, given the conflicting signals they are getting lately, euro traders may dig into the minutes of the latest ECB decision to see if they can get more clarity on where most members stand. All three of Wall Street's main indices extended their losses yesterday as the stronger-than-expected U.S. retail sales data prompted participants to lift their implied Fed rate path. This suggests that equity investors continue to hold the mentality that good news is bad news and vice versa. Thanks for watching today's market comment here at xm.com.